Ask 10 different life insurance agents if infinite banking is anything special, and you're likely to get 10 different answers. That's weird if you ask me. First, because since whole life insurance is the only financial tool that is fit for infinite banking, I would expect that all life insurance agents should at least know the basics of it. And secondly, because all life insurance and financial planning agencies claim that they hold the best interests of the client as their highest priority. And if that were truly the case, it should be expected that all agents and financial advisors should be educated about infinite banking, even if only to be able to advise clients that infinite banking is a bad idea. That is to say, if that were the case. But in order to advise somebody about something, the advisor should have accurate knowledge of the thing that they're advising about. Don't you agree? Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the last several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. And if you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. Typically, financial advisors tell their clients that whole life insurance is a poor choice and that they should buy cheap term insurance and invest at minimum the difference in the cost between the term and what a whole life policy would cost into the stock market. Of course, financial planners earn their money by managing other people's money and investing it in stocks and funds. So it's in the advisor's best interest that you let them manage your money and investments. And they make money doing that, whether your investments make money for you or not. I have found that most life insurance agents know nothing about about infinite banking other than the term infinite banking. And many will tell you that infinite banking is just a sales gimmick to get you to buy a lot of insurance. Or if you ask an agent about infinite banking, they may tell you that they can sell you a policy that's better than infinite banking or better than whole life, or that they can set you up with an infinite banking policy when in fact they don't even know what an infinite banking policy actually is. A lot of times, those agents will be captive agents of an agency that focuses on indexed universal policies, or IULs. And I have to believe that those agents believe that IULs are the best policies ever and really are something good for their clients. That's because that's what their agency has taught them. Never mind that they also pay the highest commissions of all to the agents, while a properly designed infinite banking policy will actually cut off the agent's commissions in half or more. And that's one of the secrets about infinite banking. And I would say that it's the first question that you should ask an agent that claims to know how to construct a policy for infinite banking. How do you design a policy for infinite banking? If any part of their answer is IUL, indexed in universal life, that means they do not know how infinite banking works or how to design a policy for it. I say this over and over again, and in a lot of my videos, infinite banking depends on the cash value of a participating whole life policy with a mutual company, and that is built using cash value riders. Now, it is true that a standard whole life policy can be used for infinite banking, but only once sufficient cash value has been built up. And that'll take a while with a standard whole life policy. I'm already halfway through my allotted time for this video, and I have other videos here that explain how policies should be built for maximum value and growth for use with the infinite banking tax-free cash growth warehouse strategies. So I'm not going to go into that here. So here are the critical truths and surprising facts about whole life that make infinite banking strategies work the way they do. First, with the right insurance provider and the proper design, a whole life policy can provide the highest guaranteed compounding interest growth to your cash value account than any other savings vehicle, period. And that growth is tax free as long as it's in the policy's cash account. And it has the strongest protections of any savings product. The cash value of whole life insurance is not subject to asset calculations regarding student loans, Medicaid, or bankruptcy. And it is not subject to attachment due to debt default, collections, garnishments, lawsuits, or bankruptcy. That's not the case with any other savings accounts. Now, here's the part that most people have a really hard time wrapping their heads around. You can use the cash value of your policy without losing or stopping the high compounding interest being paid to the total of your cash value account. So if you have $10,000 in your policy's cash account, you can use up to 95% of it and still earn the high compounding interest on the whole $10,000. That is, if your policy is with a non-direct recognition company. I have a video that explains that also, and it's one of the things that an agent who is experienced in infinite banking and designing policies for it will be able to help you with. How and why that is possible is by use of policy loans. Now, let me be clear here. A policy loan does not use the face benefit or death benefit of your policy. It uses the cash value of your policy. But a policy loan does not take cash out of your cash account. Policy loans use your cash value as collateral for the loans. So your cash value stays in your policy's cash account, earning the high compounding interest while you borrow from your insurance company's general account. What's particularly great about that is that a lot of insurance companies charge less interest for their policy loans than what they pay in dividend interest. For example, my provider of choice for infinite banking policies charges 5.25% simple interest for policy loans and is currently paying 6.1% compounding dividend interest to their participating policies. So not only does that work out as being free loans, but you're still making a profit of 0.85% on the amount of your loan plus 6.1% on all the rest of your cash account. Even if your insurance company charges 6% for policy loans and pays 6% interest, and even if both were compounding, you'd still be getting free loans. But it's actually better than that because loan interest is simple and the dividend interest paid to your account is compounding. I have a video on that as well. But bottom line is, if the interest rates are the same, but the loan rate is simple and the dividend interest is compounding, you still come out ahead. Another amazing advantage with whole life insurance policy loans is that you have no enforced repayment schedule. Every other kind of loan does. So using your whole life policy as your own personal bank is far superior to using any lending institution. Oh, and lest I forget, an infinite banking account provides life insurance. And life insurance, at least whole life insurance, provides a guaranteed gain of at least 250% of what you pay into the policy tax-free. So Let's recap real quick. The best savings rates currently are with whole life insurance, 6.1%. Bank accounts, 4.5%. That's the best. CDs, certificates of deposits, the best, 5.25%. With whole life, the interest is compounding. Some bank accounts are also compounding, but many are simple interest. And that is what the case is with all CDs. They only offer simple interest. Savings in life insurance is tax-free and protected. Not the case with banks and CDs. With your life insurance, cash value, you can leverage it to take policy loans. Again, not the case with bank savings and CDs. Those leverage loans with whole life can be zero net interest loans, where with banks, you'll be charged a minimum of 8.7% all the way up to 30% annual interest. That's nuts. There is no enforced repayment schedule with whole life policy loans. But with bank loans, including credit cards, you are saddled with a minimum monthly payment that you must make or you'll be in default. And obviously, whole life cash accounts come with life insurance. Other savings accounts do not. So if you'd like a copy of the comparison chart that we just looked at, just ask for it in the comment section below or email me at the email listed in the description box. I'll be happy to send it to you. If you found this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.